Spotify has just increased its premium subscription prices in the United States. Again. And while price hikes in streaming aren't new, the timing and frequency of this move suggests something bigger is happening behind the scenes. This isn't just about music costing $1 more per month. It's about how major tech platforms are rethinking subscriptions, profitability, and long-term growth, and what that means for users going forward. So why is Spotify raising prices now, and what does this tell us about the future of streaming? According to publicly available reporting, Spotify has announced a new price increase for its premium plans in the United States, set to take effect in early 2026. The individual premium plan is increasing from its previous price to a higher monthly rate, with duo, family, and student plans also seeing adjustments. Spotify has confirmed that affected users will be notified directly before the new pricing takes effect. This marks another US price increase following earlier hikes in recent years. So why now? And why again? Spotify has stated that the price increase is intended to support continued investment in the platform. This includes improving the user experience, expanding features, and supporting artists and creators. From a company perspective, this explanation is consistent with how subscription platforms typically frame pricing changes, but it doesn't tell the whole story. Because the real pressure isn't just coming from inside Spotify. Streaming music is a low-margin business. Unlike software subscriptions, music platforms must continuously pay licensing fees, royalties, and infrastructure costs. At the same time, competition between major services, including Apple Music, YouTube Music, and Amazon Music, has kept prices relatively stable for years. However, rising operational costs, infrastructure investment, and a push toward profitability have changed that balance. According to industry analysts, many digital platforms are now under pressure to prove sustainable business models rather than focusing solely on growth. And Spotify isn't alone. Spotify's price increase fits into a broader trend across the tech industry. Over the past few years, users have seen price hikes from streaming video platforms, cloud services, and digital subscriptions across the board. This shift reflects a move away from aggressive user acquisition and toward long-term revenue stability. In other words, the era of permanently cheap subscriptions may be ending. So what does this mean for users? For individual users, a $1 increase may seem minor, but across multiple subscriptions, music, video, cloud storage, software, costs add up quickly. This has led many users to reassess which services they actually use and which ones they keep out of habit. From a consumer perspective, this creates a more selective subscription landscape, where platforms must justify their value more clearly. Spotify continues to compete on features such as personalization, playlists, podcasts, and discovery tools. However, competitors are increasingly bundling services together, offering music as part of larger ecosystems. This raises an important question: will standalone music subscriptions remain competitive as bundles become more common? And this brings us to the bigger picture. Spotify's decision suggests that streaming platforms are entering a more mature phase. Growth is slower, costs are higher, and investors expect clearer paths to profitability. For users, this likely means fewer price freezes, more frequent adjustments, greater focus on retention rather than expansion. Streaming is no longer just about scale, it's about sustainability. Spotify's latest price increase isn't just a routine adjustment. It reflects broader changes in how digital platforms operate, compete, and survive in today's tech landscape. As subscriptions become more expensive, users will increasingly decide which services truly earn their place. In the next video, we'll look at how subscription fatigue is shaping the future of tech, and whether bundling is the next major shift.